The markets are closed, but the business stories are just heating up. Hello, I'm Mai Rodriguez. Catch up with us on Business Brief. The Philippine government is preparing to settle its 1 billion peso debt to the Light Rail Manila Corporation, or LRMC, before the end of the year. The development comes after reports that Metro Pacific Investments Corporation, a major shareholder in LRMC, is planning to divest its stake in the consortium. Transportation Secretary Giovanni Lopez said that operations of LRT1 would continue despite the reported sale of shares. Lopez also noted that the government has already paid 400 million pesos of its outstanding obligations. Despite the weakened index, the Philippine Stock Exchange, or PSE, reported a 92% surge in profits during the first 3 quarters of 2025. Rather than gains from active stock trading, fixed fees served as the primary driver of revenue growth. About 876.5 million pesos was attributed to the PSE's acquisition of the Philippine Dealing System Holdings Corporation. Operating income climbed to 942 million pesos, while net income reached 738.8 million pesos, achieved despite recorded investment losses. 20 peso rice is making a return even in the current economic climate. The Department of Agriculture is mounting the Kadiwa ng Pangulo Expo from November 28 to 30 in Intramuros, Manila. The initiative, dubbed Benteng Bigas Meron Na, will hold its largest Metro Manila rollout yet, offering consumers access to 20 peso rice while extending support to farmers, fisherfolk, and transport workers. Agriculture Secretary Francisco Tiu Laurel says the expo underscores the administration's broader effort to make food security a tangible and achievable goal. The Philippines is trailing behind its Asia-Pacific peers when it comes to employer demand for digital skills. That's according to a new study by the Asian Development Bank. Paulo Barcelon joins us on the line for the details. Hi, Paulo. Go ahead.
The study analyzed 6 million job postings in Australia, India, Korea, Malaysia, the Philippines, and Singapore from 2019 to 2024. ADB economists say the Philippines has the lowest demand for digital skills among the 6 countries, citing structural issues.
The Philippines is the country with the lowest demand for digital skills. We can say that for the same job, Korean employers demand digital skills that are 17% higher than Filipino employers. And the other key finding is that that the skills demand have been increasing across countries, and more so in countries which started with a lower level of digital skills in 2019.
Despite this, demand for digital and AI skills in the Philippines is rising. Since ChatGPT's launch in late 2022, AI-related skills have more than doubled in job postings regionally. ADB Chief Economist Albert Park points to infrastructure and learning gaps as major barriers, citing the need to build digital infrastructure, getting people connected, and making it cheaper to use computers and to go on the internet. Regionally, Australia also has increasing demand for digitally skilled workers, but wage premiums are low. India and Malaysia are surging, and Singapore continues to set the standard for AI readiness. Mai.
Thank you for that report, Paulo Barcelon. Caretakers of Masungi Geo Reserve are calling for the permanent shutdown of illegal resorts in the conservation area. In October, the Department of Environment and Natural Resources, or DENR, ordered the closure of 3 resorts, namely Danum Baker, Aaron's Place, and Lihim Nabatis, that continued operating despite cease and desist orders. Billy Dumaliang, Advocacy Director at Masungi Geo Reserve Foundation, told BNC's At the Forefront that political backing allows these resorts to reopen.
What happens is after a few months, they are opened again pag wala ng media attention or if wala ng enforcement on the ground. So we hope that this time it's a permanent solution, or actually demolition nga yung hinihingi natin, because those resorts were built on waterways or within the easement of waterways, which is a no-no for our critical watershed. Unfortunately, we've heard that some even congressmen are sponsoring them. So we've heard that's how they came back the last time. Not sure if it's true.
Dumaliang also criticized Rizal Wind Energy Corporation's project, saying the wind farm should not have received an environmental compliance certificate. She warned that turbines could threaten biodiversity in the Upper Marikina watershed and 2 other protected areas. She called on DENR Secretary Rafael Lotilla to visit Masungi Geo Reserve.
Actually, what we're calling for is first exclude Masungi, because that's the abundance of research proves that you shouldn't do this in Masungi. But also more safeguards if you will do this in protected areas. More safeguards for them. Kasi until now, unclear. You're gonna hit the protected areas, the watershed. The public doesn't know. What are you going to do to prevent the irreversible damage to those protected areas? Even if it's not Masungi, it's still a watershed.
The Philippines may have a new weapon against climate change. A local red seaweed known as Asparagopsis taxiformis can slash methane emissions and drive biotech innovation. Researchers at the University of the Philippines, Diliman, studied samples from Pangasinan, confirming key traits and producing 27 new molecular sequences, a first in the country. This genetic map could enable cultivation, cut emissions, and position the Philippines as a climate-smart research leader. The World Health Organization reports that 7.2% of Filipino women aged 15 to 49 have experienced physical or sexual abuse by a male partner. The data comes from a WHO study released ahead of November 25. The violence against women prevalence estimates also found that 3.1% of women faced partner abuse in the past year. Globally, abuse by a current or former partner is one of the most common forms of violence against women. We're taking a short break. More stories are coming up next. You're watching Business Brief. You're back on Business Brief. With the home buyers cutting back, DMCI Holdings is shifting strategy, pausing new residential tower launches until 2026 and focusing on ready-for-occupancy units. Mid-market demand remains steady, driven by flexible payment terms, better on-site experiences, and targeted marketing. DMCI is leaning on the continued appeal of ready-for-occupancy and rent-to-own schemes amid high interest rates and affordability concerns. The approach is paying off as sales rose 23% year-on-year to 6.9 billion pesos in the third quarter. Regional developer SM Prime Holdings, led by the C family, is doubling down on the luxury housing boom, one it believes still has momentum. This comes even as a widening flood control scandal has cooled demand for big-ticket real estate. SM Prime President Jeffrey Lim says the company is pressing forward, though cautiously. He notes that while performance was strong this year, headwinds may continue into 2026. Driving growth is the firm's new luxury line, the Signature Series, launched with a 284-hectare master-planned estate in Susana Heights near Ayala, Alabang. The project, backed by a 25 billion peso initial budget, anchors SM Prime's move into gated, ultra-exclusive communities. The Investment and Capital Corporation of the Philippines, or ICCP, praised the Securities and Exchange Commission's initiative to allow real estate investment trusts to invest in infrastructure. On BNC's Business 360, ICCP President Manny Ocampo said the move could pave the way for billion-peso offers from tollways, water concessions, and data center operators. Ocampo added that falling interest rates and a longer reinvestment window could spark a new wave of infrastructure REITs and revive market interest.
And in terms of the timing of this overhaul, we're in an easing cycle. Expectations are for at least another 25 basis point rate cut in December, depending on November inflation figures, maybe a little bit more. We'll find out soon enough. How does this environment bode for this REIT, this new subclass of REITs?
Oh, it works well for REITs, no? Because REITs are, it's a dividend story. At the end of the day, if the interest rates come down, then it does well for REITs because issuers would be encouraged to come to market, not having to pay very high dividend yields, for example. That was the case back in 2000, 2001. Rates were relatively low, and we saw a lot of REITs come to market. If BSP continues with its cuts in December and maybe hopefully into 2026, then that may see a new batch of infrastructure REITs coming to market.
Manila's casino industry is seeing a shakeup as tycoon Eusebio Tanco backs out of buying City of Dreams Manila, saying its lack of real estate reduces the value of the PAGCOR licensed casino. Tanco, chairman of DigiPlus, says, quote, they don't have any assets as DigiPlus pivoted to a cleaner, more strategic approach, signing a 12 billion peso deal to take control of International Entertainment Corporation, owner of New Coast Hotel Manila, through convertible notes. Once fully converted, DigiPlus would hold 53.89%, securing land, hard assets, and a stronger foothold in Manila's high-stakes casino market. The e-wallet race is shifting. Maya is gaining ground while GCash faces pressure from the online gambling crackdown. Maya's earnings are tracking 3 times its full-year target, on course for its first annual profit. 9-month core profit hit 1.6 billion pesos, a 4 billion turnaround, with third-quarter net income at 532 million pesos. GCash removed gambling app links, creating short-term growth pressures despite a 9-month estimated profit of 15 billion pesos. Maya's own digital bank and new credit card product are fueling its momentum. We're taking a short break. More stories are coming up next. You're watching Business Brief. And you're back on Business Brief. Philippine shares rise on the first trading day of the week, closing at the 60-100 level for the first time since October 23. The PSEI ended 0.4% higher at 60.21. Majority of the day's most active stocks traded in the green, with industrial rising the most at over 1%. Advancers outnumbered decliners 109-72, with value turnover reaching 13.7 billion pesos. The day's most active stocks were mixed, with RL Commercial REIT rising the most at almost 5%, while BDO Unibank fell nearly 2%. On currencies, the peso is currently trading at 58.93 against the US dollar, down from the previous close of 58.86. STI Education Systems Holdings Incorporated posts 619.1 million pesos in net income for the first quarter of the fiscal year. In its disclosure, the company reported gross revenues of 1.44 billion pesos, up 39% from 1.04 billion in the same period last year. Earnings before interest, taxes, depreciation, and amortization reached 877.9 million, translating to a 61% margin compared with 46% a year earlier. STI Holdings notes results reflect the impact of an earlier academic calendar and a shift in revenue recognition. Asian shares mostly rise following Wall Street's upbeat close after a week of market drama. Japan's Nikkei and China's Shanghai Composite are in the red, while other major markets trade higher. On currencies, the US dollar appreciates against the Japanese yen, South Korean won, and the Thai baht, but remains flat against the Hong Kong dollar and declines against the Singapore dollar. The Australian dollar, meanwhile, gains against the greenback. In commodities, gold falls nearly 1%, while oil prices remain mixed. In crypto, Bitcoin rises about 0.2%, and Ethereum gains nearly 0.9%. In the U.S., the 43-day government shutdown cost the economy $11 billion. But Treasury Secretary Scott Bessent says a full-blown recession is unlikely. Bessent says interest rate-sensitive sectors like housing have slowed, but overall economic growth remains steady. He notes that inflation is largely coming from the services sector, not tariffs, and that falling energy prices should help ease cost pressures. He adds rising home sales, tax cuts, and policy changes could boost real incomes and federal refunds by 2026. The director of the National Economic Council, Kevin Hassett, meanwhile, describes 2026 as a potential blockbuster year despite a fourth quarter slowdown caused by the shutdown. In Brazil, the UN Climate Summit ended with a fragile deal. Only wealthy nations will triple funding for climate adaptation. Fossil fuel talks collapsed as oil-dependent countries blocked action, leaving a voluntary plan with no roadmap. The U.S. stayed away, China played a subtle role, and indigenous groups protested dropped reforestation goals. The final deal weakened scientific authority and skipped targets for fossil fuels and emissions. After slow ticket sales, Wicked for Good exploded at the box office, earning $150 million in the U.S. and Canada, a record for a Broadway musical adaptation. Ending a 9-week slump, the film earned another $76 million overseas for a $226 million global opening. The Witches of Oz are certainly bringing the magic. The new box office numbers are also the third biggest of all time among musicals. That's a wrap for today's Business Brief. I'm Mai Rodriguez. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel.